NGX All-Share Index gained 1.9% last week as the index draws closer to the 40,000 mark, as market cap for equities also increased by 370 billion naira. Muktar Mohammed, an analyst at Assar Investment, joins me now to discuss what is shaping investor sentiment and what could shape it going forward. Muktar, it's always a pleasure to speak to you. So what has changed? The market up 2%. I think it's big news given how poorly it has performed this year. Has anything significantly changed in your view?
Well, not really. Perception has changed. Maybe perception has changed. Like I keep saying, the market is driven by perception. And in terms of when you look at the equity, most of those equities are still very good when you look at their first quarter result. And these changes always happen, especially when we are expecting the half-year result from most of those highly capitalized stocks, especially the banking stock that will be paying interim dividend. So those always happen. So I'm not surprised that we've seen this perception. But even if you look at last week, sometimes we see where the volume will come down, then the price will go down, the volume will go up, the price will go up. So all this thing will play out until those numbers start coming in, especially from the tier 1 banks that are paying interim dividends. When those numbers comes out and those numbers are positive, you might see a slowdown depending on what the price is like. So if the price they think has gotten to its bottom level, they think that's the break, then you see. But if they think that there's still more growth in terms of capital appreciation, in terms of high dividend payout, the results, then we could see the market going up again.
All right. But let me ask you this, because I think there could be some positive sentiment forming maybe a few months down the line, because some analysts that I've spoken to have pointed to the potential Eurobond issue, perhaps allaying the fears around the currency markets. And then as GDP growth continues to pick up, there could be just that positive sentiment for equities. And I think one more point is the direction of interest rates. We have seen fixed income yields a bit volatile, but they have come off their highs of this year. So overall, do you think that these factors could combine to get the market moving a few months down the line?
Definitely, well, those factors will combine, especially the interest rate and the Eurobond. That will give, for the Eurobond, I think what we will see there is we will see the kind of substitution we normally see. Then we will begin to see investors begin to, especially foreign investors, begin to come into the market. I think that's what the Eurobond will be able to achieve, and then they could find some space in the equity market, because we've seen the type of instability in terms of volatility and price volatility we've seen in the market, because we've not seen these foreign investors that tend to stay in one stock for up to 3 to 6 months before exiting to other stocks. So what you see is retail investors, especially Nigerian investors, that are there for the short term, and when they make the capital appreciation, they tend to move to the next equity, and they are not there to play the long haul. But when you talk about the foreign investors, some of them are here to stay for 6 months, some of them are there to stay for 1 year in a particular equity, and that helps boost the price. Also, the Eurobond, for me, the achievement is to make sure that we have those foreign direct investors, foreign investors, portfolio investors coming to the market. The interest rate, of course, it will play a big role, especially, like I said, if this number comes out and they are looking at interest rate, earnings in terms of fixed income, then dividend yield. If you have to buy now, you have to wait for 6 months. So those are part of the numbers that we are going to see play out. I definitely agree with.
Okay, so obviously you like the banks. So which stocks would you be recommending moving into that earnings season and as these companies begin to announce their half-year numbers?
Well, Dangote Cement has come out with their results already. So we've seen the numbers. We've seen some positive in that way. For if you look at the conglomerate, I think these are stocks that not even Boa Cement did very well the half year. So we shouldn't take our eyes off the stock. But for the banking stocks, still remain the tier 1. It's been the toast of investors. You see the lack of Zenith Bank, we see the lack of GTB, and we look at the lack of UBA. But one bank that I'm really thinking investors should really take an eye on is Assar Bank. Let's see what the half-year result will be. That's the bank that seems to be moving in the direction. If you look at their first quarter result, and if you want to do that with your buy and buy towards the end year, if you even what they are making now, they made 60 billion profit after tax. If they make under 60 billion in the first quarter, that gave it 120 billion. And if they go to the 240 billion, that means they're already buy and buy with Zenith Bank and GTB. So that is where I'm looking at. If you ask me as an investor, what do you want me to look at? I would say I would look at Access Bank as one of those banks that could be could be one of the big things that will happen in the equity market this quarter, no, most likely this year.
Earlier, I was speaking to a lawyer about the implications of President Buhari signing the petroleum industry bill. So now we have a law. What do you think will be the impact of this for the oil and gas space? Do you think this could catalyze renewed interest in the space, or do you think it's a non-issue?
Well, it depends on which side of the spectrum you are. If you look at the oil community, they're not happy with it, and the president have signed it into law without looking at some of their grievances, especially the 2.5% that's going to be given to the oil community, and everywhere you have a pipeline pass through, also they have to pay. But the bigger picture is when you look at the diversification, the privatization or the commercialization of NNPC, DPR, and others. I think that's where other investors will look at. But outside of that, I don't see anything new happening. Will we really have the deregulation as the as the PIB bill and signed into law? Will we go into full deregulation? What will be the price of food? Will the labor be able to say now we have a full deregulation? There's a lot of teaching that still need to be done, especially what are going to be the perceptions of not only those in the oil and gas sector, but the general public, especially the Nigerians. What are they going to see as a positivity? Because you are saying that when you do that, we will no more have this area of paying of subsidy. That means the price of refined petroleum product will have to go up. So, but in terms of generally attracting investors into Nigeria, I think the challenge would be if the oil communities that those pipelines are majorly those lines will pass through will accept what have been put into law. If they do, then we have peace in that, and then we attract a lot of investors. But if they are still clamoring, and then we have insecurity like we always see there, maybe we'll continue to see the pipeline house, because the incentive there is that if any pipeline pass through your place and there is no any issue, that means you have to protect it to be able to get that 2.5. If it's attractive to them, then we'll see a lot of protection of those pipelines so that they can get it to 2.5%. That will help develop the community. Outside of that, if they don't accept that, it will still be a very huge challenge.
Okay, well, fingers crossed. Thank you so much for your time. Muktar Mohammed, an analyst at Assar Investment, giving us his perspective on the recent rally at the NGX.